The Precious Metals Week in Review, March 24th, 2016. Brought to you by Precious Metals International. This week, our hearts go out to the families of those who were injured or lost their lives in the terror attacks in Belgium, the latest European country to be hit by the growing terrorist threat that is known as the Islamic State. The number of Americans filing for state unemployment benefits jumped by 6,000 claims last week, but an identical downward revision to the previous week's numbers made the result a shell game. The seasonally adjusted level of claims remained at the previous level of 265,000. The U.S. Federal Reserve remains the primary driver of market moves as analysts begin to parse every word any of its members have to say. St. Louis Fed President James Bullard sparked the move higher in the dollar this week when he told Bloomberg News, "We didn't do it, raise rates, so now we can look at April and see what the data looks like when we get to April." His words came on the heels of Philadelphia Fed President Patrick Harker, who also said that the Fed should consider hiking rates next month. The Fed acknowledged last week that the weakening global economy will have a clear effect on their ability to continue interest rate increases, and it now appears that individual members disagree with Chair Janet Yellen's statements about that. North Korean leader Kim Jong-un continues to flagrantly defy the new sanctions put in place by the United Nations and the United States over their nuclear ambitions and missile programs. On Monday, the belligerent North once again fired multiple short-range missiles into the sea off its east coast. This latest provocation follows last Friday's launching of 2 ballistic missiles, and Monday's projectiles flew 200 kilometers from their launching point before falling into the sea. North Korea's neighbors in the region are growing increasingly concerned over the North's growing aggression. Japan's manufacturing activity contracted in March as exports declined more than expected. The drop marks the first such contraction in nearly a year and has analysts concerned that the plunge is evidence that the global economy is showing signs of further weakness. The data came from an initial flash reading of the Purchasing Managers' Index (PMI), and if the final report confirms the contraction, Japan's economy may be headed back into recession if the trend continues. On Tuesday, Brussels, Belgium was rocked by 2 terror attacks on its travel infrastructure. Explosions rocked the Brussels airport and a metro station, triggering lockdowns and security sweeps throughout the city. The Islamic State immediately claimed responsibility for the strikes, and the jihadist group promised dark days for those countries which continue to battle the group, threatening that what is coming is worse and more bitter. The latest terrorist attacks to strike Europe have reignited tensions over the continued migrant refugee crisis. The attacks have served to inflame anger and suspicion at the growing number of refugees who have flooded into Europe as they flee civil war and terror groups in their home countries. Fears are growing that Islamic extremist groups are using the massive movement of people into Europe as a screen to spread terrorist cells throughout the region. Greece, which continues to struggle under its own economic troubles, is at the forefront of the crisis as many refugees arrive on its shores first before trying to move further into Europe. The growing mistrust across Europe has led to many refugees being stranded in Greece as other European Union members close their borders and refuse entry to additional refugees. The Bank of Japan (BOJ) apparently held a lively discussion on their January decision to move to negative interest rates at their most recent monetary policy meeting. Thursday's release of the meeting minutes from the central bank's meeting over March 14th and 15th showed several members debating the pros and cons of rolling back the policy. One board member said it's preferable to roll back the negative rate policy, but abandoning it immediately after introducing it would cause market confusion and risk eroding trust in the BOJ. With the effects still not clear, we should maintain the policy. U.S. oil prices dropped back below $40 a barrel on Thursday, falling nearly 3% as the Energy Information Administration reported that U.S. crude stockpiles surged by 9.4 million barrels last week. A Reuters poll of analysts had forecast a climb of just 3.1 million barrels, and the sharp surge to the upside overshadowed rumored plans by global oil producers to freeze production. The euro started the week attempting to move higher against the US dollar in a series of peaks and valleys, but by Tuesday had begun steadily dropping. In this shortened week, the euro appears set to close lower against the US dollar. The Japanese yen also moved in a series of peaks and valleys this week, but the overall movement was to the downside against the US dollar. The yen too appears set to close the shortened week lower against the US dollar. It was a shortened trading week this week due to the Easter holiday this coming weekend, but events in Europe made for a news-heavy week. The latest terror attack to strike a capital city of Europe has renewed concerns that efforts to combat the Islamic State and other jihadist extremist groups are failing miserably. The attacks have also renewed tension between the refugees and the native populations of the countries they are fleeing to. In Greece, a leading clergyman has begun to say that the migrants are not welcome and that we are not compatible. Our customs are incompatible. We do not like their culture. We do not accept their religion. The growing tension is likely to lead to further confrontations and an escalation of the already massive humanitarian crisis. In the United Kingdom, the Brussels attacks have brought stronger calls for the UK to exit the European Union, despite what would clearly be a serious risk to the downside for the economy of the UK if they do vote to leave. The U.S. Federal Reserve is causing massive confusion in markets as it seems to backtrack on the dovish tone it took following the last FOMC meeting at which it decided to hold rates steady. Leading Fed members have begun taking a more hawkish tone, saying that rates should be raised in April despite what appears to be a growing weakness in the global economy that runs risk of dragging the U.S. economy down with it. The comments and calls for conducting another interest rate hike have triggered a strengthening of the US dollar against other global currencies whose governing central banks all seem to be set on maintaining a negative interest rate policy. The price of oil, in the face of a strengthening US dollar and a massive surge in stockpiles, appears to be sliding backwards again. A rumored production freeze by the world's major producers has yet to materialize, and the global oversupply continues to put downward pressure not only on the price of oil, but on the world economies that depend on oil for growth. The political landscape in the U.S. also continues to trigger fear and uncertainty over the future of the U.S. economic landscape. The Republican Party is showing signs of fracturing as Donald Trump continues to gain ground over his opponents. Discussions of a brokered or contested convention are becoming commonplace in the news. If Trump does not secure the 1,237 delegates needed to lock him in as the party's presidential nominee, the convention has the legal ground to pass him over in favor of another candidate of their choosing. There have also apparently been discussions that even if Mr. Trump does manage to secure the 1,237 delegates needed for the nomination, the convention could still take steps to overrule his selection. If the Republican convention goes so far as to overrule the popular opinion of the people of the U.S., the ensuing uproar could be unlike anything ever seen in American politics. An unclear political future could also lead to an uncertain economic future, particularly if the global economy continues to weaken in the intervening time between now and November's election. In such an environment, wise investors continue to diversify their investment portfolios away from heavy exposure to stock market volatility. Many investors have continued to follow through with their plans to acquire additional physical precious metals as part of a well-diversified investment portfolio, as prices have remained at levels that they deem to be clear buying opportunities. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, March 24th, 2016. Brought to you by Precious Metals International.